What's up, traders? Welcome to the midweek market update. So this week we actually witnessed S&P 500 history where the market gapped up overnight on vaccine news, gapping up through our resistance trend line over 100 points. In the SPY, that's about a $12 to $15 gap up. But from then, we've really done no more than just come back down and fill that gap to the downside. And on Tuesday, we actually printed a hammer candle. So I was under the impression that we would see a gap fill reversal and some more meaningful upside here on Wednesday for a few key reasons, which we'll get into in just a moment. But that wasn't the case. Instead, on Wednesday, we have an indecision candle, an extremely tight range, and it's all punctuated by what? Pretty light volume down here. So whether or not it's because the market's trying to digest the gap or whether or not it's because it was the Veterans Day holiday, I don't entirely know. I'm just going to play the chart as it lies, and what it's saying right now is essentially wait for some more information in one direction or another. Before we get into some more nuanced levels, I do want to bring our attention to the S&P sectors for just a moment. We had 6 up, so 6 green, and 5 down, and most importantly, the XLK, which is the technology sector of SPY, was up over 2% today. So why is it that the SPY itself was only able to close up 74 basis points? So really interesting little divergence there. In terms of levels and why I thought the SPY was going to go higher, the broad market was going to go higher on Wednesday today, if we zoom in and take a look at the action here, this is why. So first of all, I want you to have this key area mapped out on your charts before we do anything else. That's here at the 362 whole dollar just about. You can see, boom, on the bounce first off of our previous all-time high rejection, and then this rejection as well, which ultimately led to more of that meaningful gap fill to the downside. But why did I expect more upside here on Wednesday? Reason being is if we adjust this level up a little bit, you'll see that more accurately represents the resistance. That's 1, 2, 3, 4, 5, 6, 7, 8, 9 touches to that same level there at 354.60. It's a pressure cooker top, especially with higher lows coming into it. I was definitely expecting a bigger break to the upside, but again, with the lack of volume, the follow-through really just wasn't there. So definitely adjust that level on your charts, get it in there, and again, that's the reason why I was looking at some more upside. Let's move over to internals, and we'll check it out here. So I want you to take away 2 things from this. First of all, is that Monday looks extremely bullish, right? We had a read up here around 900 million. Now you might be saying, but why? SPY sold off all day. Well, you're right, but when you get a gap up, generally the volume starts coming in as reads to positive stocks because the open is much higher than the prior day's close. So that being said, we start to see this really positive read even though the stocks are selling off. What I think is more accurate of a representation is what was happening on Tuesday and Wednesday, where there was no real conviction in either direction, seeing really lackluster reads, not even cracking that 200 million. If you remember from last week, we were really looking at reads that are solid up around the 450 million area. So that being said, ignore this large day that happened Monday. Same thing holds true for the advanced decline lines. On Monday we had that large, trending section up here. Simply not true based on all the stocks gapping up. But the other key takeaway and thing I want you to learn from at least these internals here is that on today's action, Wednesday, we saw a opening read of plus 1,000, even a little higher. Whenever you see an opening read that's rather strong, or it could be rather weak as well, and it comes down into the 0 line or up if it's low, and it comes into the 0 line and holds and doesn't continue much lower, then you're looking at a responsive trading day. And all I mean by that, if you just look one screen down below, is that in general, you can start to fade any of the key levels that we have on our futures chart. So whether or not that's yesterday's high, the overnight high, yesterday's low, the overnight low, or any of the value areas. That's generally when you know you have a responsive day. So take that away, if nothing else, from the internals here. And lastly, just to cover the tick, more of an intraday indicator. But on Tuesday, again, really strong build here, closing up around 4,000. I thought, all this pressure coming into Wednesday would explode and lead to more explosive breakout, but again, it just wasn't the case, and instead we saw a lackluster read, not even making it to 2,000 by noon, and from the afternoon 1 o'clock time period, we really just came back down into 0 and parity. So I hope that's a little bit informative on the internals and how you can use them. Let's hop over to the market profile section. Again, here's another reason why I thought we would see a larger move on Wednesday. Reason being is we have a mechanical high here, and this, I wouldn't really call this meaningful excess on a, when we're starting to see ranges that are 10 points in a 15-minute candle. So that being said, I would call this a poor high and a mechanical high. And in general, when those break, you're starting to see more upside action. And if we look to the left one profile, this M period has single prints, and that in general is a really, really weak area. There's really no resistance in this general area. So I thought the move today would be right up to our 3580 mark, and it simply wasn't the case, right? So now what do we have, and what can we look at going forward? Going forward, I want you to note here that the point of control here on Wednesday did not close high or anywhere near the middle of our distribution, and it was actually weak, right? So the fairest price to do business was actually lower than our close. So that being said, we are looking to favor a little bit of corrective action to the downside tomorrow. We might have gotten a little bit ahead of ourselves here. I think it's probably, the real fairest price to do business is probably in between yesterday's and today's point of control. So somewhere in here, maybe the 3550 area. But do note that we have a poor low here. So these three periods all lining up are indicative of a poor low, coming right back down to our previous mechanical high. Take this, I know it's a lot of information to sort of take in at once, and especially if you're not used to this software, but just know that if we do see any downside action and we break down below Wednesday's lows, those are poor lows, and we could see much more meaningful downside, at least to the previous point of control here at 3540, if not Tuesday's low, which is the key low of essentially this 3-day balance, right? So here we are, Tuesday's low, right around the 3505 quarter mark. So I know a lot of information, but hopefully you can make something of it. Again, poor low, point of control did not migrate higher with price. That is all bearish. And our downside targets now become the previous day's virgin point of control. We did not test this area, and then the low. So those, in essence, are the boiled down points here. And wrapping it up here with a little bit of the cues. First off, we did fill our this week's gap anyways here. So that has been removed from the chart. I do want to make note that our gap below has not filled, but it has partially filled, right? So now a lot of support at that 50 SMA, and in general, this 280-50 area, that's definitely a buy on any sort of bounce back down into it, looking for an intraday bounce to the upside there. For now, do know that we're back below our resistance trend line now, and that will be a key battleground, especially given the fact that we failed back below it on Monday on that fading day and have not come back down or into it to retest it. So that's going to be key area of resistance number one. After that, number two is going to be our double top from last week's Thursday, Friday action, 295.50. And then after that, the swing high, of course, the new swing high. Let's just adjust this actually to do something like that. I think that's more accurate. Probably look out for that at 299. And then, of course, the all-time high at 305.50. With a green candle like this, especially with a lower wick, I would expect some upside continuation. We already talked about the fact that tech was really strong today, so we'll see if that continues into the end of the week. And lastly, IWM, the clear winner of them all. It's been holding its gap extremely well. Another thing I'd like to point out is the fact that we cleared our previous all-time highs, all of them really, our swing highs and all-time highs, and now we're trading right back up at that previous all-time high that was around 173.40. If I scrunch this chart up, though, I want you to make note, let's actually flip it to the weekly. I want you to make note of this really interesting nuance, right? If we zoom in and connect our all-time high with our previous high pre-sell-off here, where did the gap start to fill and go exactly to? Right to the back test of that resistance trend line. So that's no coincidence that happened there. It's also no coincidence that it's coinciding with our previous swing high. All of those points of support, it's really no, like I said, no coincidence that that's where things are starting to bounce from, and it looks like that level is holding for now. So going forward, what can you expect? Obviously, with a tail here on Friday, we are expecting that buying momentum to carry into the rest of the week. We have our all-time high now at 178.10. Above that, look for whole and half dollars, intraday levels that do form. To the downside, as we already talked about, I really do think that this is a strong buy no matter what, but if it does break, look for the gap fill down to 165.73. All right, that's going to be it for this week's episode of the Midweek Market Update. I know it was a lot to digest, especially in the S&P sector. We covered a lot there. We covered the daily chart. We covered the S&P sector breakdown, an intraday chart, the internals, as well as the market profile. Tons and tons of information, I know. But what do you do with it all? Again, based on our daily candle here, it's going to be a wait and see. Take it day by day. We know we have a poor low. We have a target below. And ultimately, Tuesday's low is the line in the sand. We also have, knowing that we had a strong breakout over our pressure cooker top on the intraday charts here over our 354.60, we could potentially see some upside continuation, in which case we have mapped out new targets. The previous all-time high at 358, that little intraday bounce that we saw there on this Monday candle, and of course the all-time high after that. So take it day by day. You have the levels mapped out. Use those market internals to gauge strength. And with that, I wish you good luck into the rest of the trading week, and stick around for the weekly watch list coming out this weekend.